trading risk to reward versus trading the trend. We're going to talk about today in this video from a teaching perspective for a beginner, intermediate, advanced. And my goal for you is to understand what trading strategy works best for me, because many of you have heard just trade the trend. If we're going up, just every time it pops down, buy it. Pops down, buy it. And I'm more specifically talking about trading, not necessarily long-term investing. All right. Now, risk to reward may be new for some people, and I'm going to explain what that is, why you see certain traders maybe take a different trade than you took. All right. So I personally like trading risk to reward. I'm paying attention to the trend, but I am more of a day trader / scalper. So that simply means that my risk to reward needs to be on the right side of the trade, not just simply trading whatever trend it is for that particular day. All right. So without further ado, give me a like, give me a subscribe, turn on those notification bells so you know when I pop out a new video. I appreciate all the love and support. We're almost to that 2K number, and that's a big milestone, right? Anytime you keep stacking 1,000 people, you just put those people in a room, it's like, okay, right? So we're looking to grow this channel and continuously give the value out to everyone that is willing to listen. All right. So without further ado, let's jump into it here. And I've got a little chart here for the risk to reward piece. And I want you to understand that simply from a chart perspective, let me give you an idea of trading the trend. Okay. Trading the trend. So that simply means that if I'm on a daily time frame, right? And again, if I have newbies on here or anyone beginning that is not necessarily chart savvy, okay, and you see these lines and all this stuff going across the screen, I'm going to clear it up for everybody per usual. And the trend on a daily time frame is up, right? If I draw a level from here, April, we're up, right? That is what trading the trend essentially means, is that on a larger time frame, are we in a bull market or a bear market, right? A bear market is a 20% pullback from the highs, right? So 2022 was a bear market, right? We had a little bit of a stint of a bear market this year, but it did not continue, 20%, right? So we are still in an overall bullish market ever since 2022, right? So when you hear people say trade the trend, right? It does depend on the type of trader that you are. If you're a long-term investor, you're looking for every pullback, buy the dip, right? That's what everyone says, but where is the dip, right? If you're dollar cost averaging, that is very easy to do. If you just set it and forget it, turn on recurring buy, that is not difficult, right? But when you're trading intraday, like if you want to learn how to make income day in and day out via trading, right? Which a lot of people are trying to learn how to do, or at least curious about, then the risk to reward strategy might work a little bit better. Okay. Or something to consider. So for example, if I come into a smaller time frame, just say the hourly time frame, okay, we are bullish on a weekly, we are bullish on a daily, okay? However, when we come down into the hourly, we are a little bit more on the bearish side because the trend broke, right? So if someone is not knowing where the bottom is, or they are trading more specifically, if someone enters call options right here at the highs, right? That, in my opinion, is what we call a poor risk to reward, because you can see that we could not get above this area of resistance, right? So the risk to reward based on the trade that you are taking is a little bit skewed. Here is how it would look, and then I'll go into that chart to give you some math. I know some people aren't math folks, all right? So let me draw, as we call the tool here. I believe it's on Robinhood Legend as well. If I click down here next to here on Webull, right? I do a long position. That means I'm looking for the stock to go up. In this case, I'm looking at SPY. Okay. I can see that there's support right here. Okay. And that's how kind of my risk to reward would look. Okay. So when you see maybe traders saying something along the lines of, hey, I'd be careful, there's a top maybe in, I still don't like the upside yet. Buy the dip, of course, right? If you're buying call options, put the expiration further out. However, this is what the risk to reward looks like, okay, from a visual perspective. If I enter calls right here at 670, right, I've got a small $3 move that I can go in between, okay, right? So that risk to reward, right? Yeah, you're trading the trend, but that risk to reward is a little bit skewed. So I may flip it and I may start looking at, okay, I don't really like the necessary risk to reward for day trading because we're getting a little bit overextended here. Okay. So I might start looking at shorting the pops because my risk to reward could be a lot better. Okay. On the pullback. Now, I would say that for anyone starting, most people can't conceptualize going the opposite direction because they're like, the market goes up over time. Why would I play against it? That doesn't make any sense. Yes, I understand that, right? Which is why anyone starting, right, I've simply mentioned calls most of the time, all right? Or buy the dip to go higher on solid companies, buy the dip to go higher, right? So, but once you start understanding how to trade both sides, or if you're interested in that and making money both ways, this is what traders are looking at when their mind is saying, hey, man, maybe I'll just wait for the break of this trend a little bit because I would have a better risk to reward. You see all that reward possibility, and then I can control the risk a little bit more. If it breaks above those highs, I stop out, right? Versus if I enter here, right? If I enter call options, and this is on the, if you look at the bottom of my screen here, this is the beginning of October. If I enter call options here, thinking that it's going to go all the way up here, I do have that risk because look what happened last time. Pull back and then we grind and grind and grind and grind and grind. We never really came back to retest certain levels. Now, no one can predict how aggressive the pullback is going to be. This was a little bit skewed because of President Trump coming in saying about tariffs, okay? But we could have pulled back to about 663, right? 660, and it just blasted through all those levels. So do you see that that risk to reward profile is a little bit skewed, right? That's about a 50-50. I don't want a 50-50, right? I don't want 50-50 on my trades. So let's look at the current day, okay? The current day. Since we broke trend here, right, we've still got overhead resistance / supply, okay? So if I'm intraday trading, right, I want to trade in the channel of where I see buyers and sellers, okay? So buyers bought up the dip here, right? And we were kind of in the middle of this channel this morning. So not necessarily the best trading. Yes, we went up. Yes, we went up. Yes, we went up. But guess what? We're still in this lower high situation, okay? So do you see that the trend changed on the hourly? Right here, right here, right here, right here. So yes, you can trade trend. Yes, you can buy the dips, but also you've got to be like aware of different time frames to understand what's the better risk to reward. Can I control the risk up against 668 resistance, 667 resistance, 665, 666 resistance, right? Until we do something like this. Now I can get a little bit more confident and saying, all right, cool. Let's get back to trading the trend, right? So again, for anyone beginning, let me simplify it again. Number one, trade the trend. That simply means that over a course of time, the S&P 500, the strong AI stocks, the strong earnings reports, they are all trending upwards, right? We've seen AMD take off, Google took off, right? So yes, trade that trend, but as these stocks get a little bit overextended, so for example, AMD, it can go higher, but AMD already made a 165 to 140 or 242 move. So yeah, I can trade this trend, but I might just stay away from it because the moment I get into calls, I'm not saying it's going to happen, but the moment I get into calls, I can see clear resistance up at the top here in this channel. So personally, I'm looking more so for that risk to reward up against this resistance because I can just stop out if it gets above that 242, right? So I can see clearly where that is and then how far support is away. So I can choose to trade right that direction, or I can say this stock is just too strong. I do not want to trade against it. That's fine. Right. So for my Leverage University members, for anyone that has seen me trade, you have noticed that I'll take different trades and it's like, how did he make money on that? Right? Like, how did he make money on a put, or how did he make money on a call when the overall trend all day was up and he was going against it, or the overall trend was down, right? That's because I'm very understanding that I'm a scalper or I'm a day trader, that I like to hold my trades within typically an hour, max hour and a half through the morning session of the New York session. So whatever resistance and support I have, I'll trade off of those levels. All right. Let's go into this graph here. Okay. So I want people to understand, the risk to reward profile here that most traders are typically looking for. All right. So we're not worried about necessarily how much money you're making. Okay. As you mature in this skill set, myself included, right? I'm not where I want to be, and no one should be settling where they want to be. Okay. But you're taking it day by day, week by week, month by month, year by year, right? Improving your skill set. So most traders are looking for most traders, including myself, are looking for a 2R trade. Okay. Some might say this 3R is a lot more worthy, right? It's worth it. That simply means that whenever I enter a position, right, I'm not worried about necessarily how much money I'm going to make. How much am I risking? So if this trade goes wrong, right, what's my 10%? What's my 15%? What's my 20% stop loss? Okay. So let's just use a round even number of $1,000. So the position size, let's give an example here. Position size equals $1,000. That means when I enter a trade, I put, let's do 500, right? I want to make sure everyone's included. So this particular position size is good typically for about a $2,500 to a $3,000 account. So every trade you take, I'm going to put $500 in. So let's just say 3,000 account. So account size, $3,000. Okay. So you're putting in $500 into that trade, right? And whatever trade you're taking, it could be puts, calls, it does not matter. And you have a total of $500 in. Okay. So my risk on this trade is based on the person's risk tolerance. Okay. That essentially means that if a person's a little bit better on the charts or has a better feeling of whatever they're trading, they might widen their risk to let the trade play out. So if you put $500 in, a person might say, hey, I'm willing to risk 25% on this. Okay. So if we do the math in our heads, 10% is $50. Cool. 20% is $100. And then just say $125. Right. So the person's willing to risk, if the trade goes incorrect, $125. All right. So that means if you put a $500 trade in and, you risk 25%, which is a little bit high in my opinion. Right. But there you go. Now, if a person wants to keep a tight risk, this is a person with high risk tolerance. Okay. There's not a right or wrong way. Risk. Let's just say a person wants to keep it a little bit tighter than that and wants to do underneath 20%. So let's just say 15%. So Brian, cool. $75 tight stop loss risk. Okay. Now, how much should I be looking to make? Okay. If I'm risking, just say 15%. Okay. I'm ideally looking, and this is where the R's come in. Now, some of you, I just want to expose people, right? This is a beginner friendly channel, but I want to expose people, and my intermediate advanced traders, you understand. But if you are putting in and risking, right, $75, right, I want to make double that for 2R, right? So that means that, what is that? 75 times 75. All right, let's do 150. Okay, come on, Brian. That means I want to profit 150 on that trade. Okay, that'll be a 2R trade. Okay, I put 500 in, the trade goes in my favor, I make 150. Okay, so that is how you calculate that, or that is how you look at that. If you keep the position size the same every time, and you just take more solid trades. So that means that if you have a winning percentage, just say you take 5 trades, okay, and you have 3 winners and 2 losses, okay, that means, and it's not perfect, I'm just giving you some math to show people that you will take losses, but this is how you manage your bankroll, your account, right? Let's go 150 times, just say you take a 2R trade every time, 150, that's 300, that's 450, right? So I make 450, and then 2 losses, right? If I keep that tighter stop loss risk, that means I've lost 150, right? So you profited, total profit, 300. So you are profitable, right? So that is what most traders are looking for when they are taking a trade, and why you might see them holding something a little bit longer or whatever it might be, is they're trying to have a positive risk to reward that's worth it. Now, if I take this trade and I make a 1R trade, that means I risk 75, I make 75. Yeah, you are profitable, but maybe, it wasn't the best trade, or maybe you had a poor entry, whatever it may have been, right? If I make a 3R, 4R trade and I get 50% on my trade, so I make $250, stuff like that, on a $500 position, right? My Leverage University members know that I lower my risk size when we have volatility like we're having right now at the time of this recording, and my normal trades are 30 to 40%, right? So when I take a 30 to 40% trade and I have a decent position size, just say it's $500, right? I don't need a lot of money to make my $250, $300. But if I have a full position size in a trade, right, there's your $600, $700, $800, $1,000 a day, right? So this concept of I need a lot of money to trade, no, you need the right risk to reward, you need solid entries, and you need to understand market conditions about where you want to take your trade, right? Can't just enter options trades or trading anywhere, right? There's a specific entry criteria, so you're on the right side of the trade. Me and you could enter the same trade. I enter at a certain position and you enter an hour later. I'm up 50%, you're down 10, right? So sorry about that, but that is why that risk to reward strategy, a lot of traders will use day in and day out, saying, cool, are we in resistance? I don't really like call options unless we break. Are we in support? Cool, I don't like put options unless we break, right? So that is very, very important to understand, because when you hear people say trade the trend, right? Where's your entry, right? The trend could be up, but if you enter at the top, you're down. The trade's already gone. If you're trading down, right, and you're like, hey, put options, it's red today, it could already be in support. The trade's gone and you enter puts at the bottom and you're wondering why in the world every time I enter a trade, it's, going the opposite direction. It's because your entry criteria, you're not having a positive risk to reward. All right. So I don't want you to get too in the weeds of this right here, but this is just a little chart to show you that scalpers, right? Scalpers, myself, I do scalp. So my Leverage University members know that I'll have 50%, 60% trades because I do trade weeklies on solid moves. So I might be looking for a bigger positive risk to reward, 3R, 4R, things like that, or even a 1R is fine. So if I put, $300, $400, $500 in and I take a scalp and it's 50%, I don't need a 2, 3, 4, 5R, right? Momentum breakout, right? That's a little bit more of a day trader that's willing to hold their trades longer, which I also am. right? Maybe someone is a pullback retest person or willing to take the trade and swing it into the next day or hold the trade a little bit longer, right? So you can kind of see here that the more that you have time on your contracts, the bigger time frames you're looking at, you might be looking for a bigger risk to reward because you can control it, right? All right. Let's go back to the charts and I'm going to show you exactly what I'm talking about on a different chart. Okay. Let's go to NVIDIA. Go to NVIDIA. Okay. So we have NVIDIA here that is on a weekly. Everyone knows this already. Bullish, right? So if a person's looking at a weekly time frame, this red candle means nothing, right? That is simply a pullback, bullish, still holding 183, breaks back above 184. We're going to new all-time highs, 200 plus, right? So trade the trend, right? But again, here is why I said the entry criteria matters. So if you're trading the trend and you just enter call options, and I'm talking about trading, not just buying shares, okay? You enter a call option at the top, right? Oh man, I'm just gonna wake up, calls on NVIDIA every day, and you enter at the top and it goes from 195 all the way back down to 177. You are underneath water if you don't have your stop losses on, okay? So if I go into a hourly time frame, you can kind of see exactly what I'm talking about here, that NVIDIA simply pulled back, but I want to enter call options where I see big money buyers. So where is the change of direction every time NVIDIA got down to 176, 176, 176, 176, 177? There's a kind of a takeoff right there, right? Gets above new previous all-time highs right here at 184.50, right? Then there, I can look at the chart and see that we're going right back to highs, okay? So I personally was shorting NVIDIA the past 2 days and making good money, right? And you're like, Brian, what? Shorting NVIDIA with puts? Where? Because I'm trading risk to reward off of levels, okay? NVIDIA had a support of 184, right? And then it got underneath 184. You can kind of see, couldn't get back above, couldn't get back above, can't get back above, can't get back above. So I can control this risk. Here's how the risk to reward looks. Until that thing breaks, I will switch my sentiment to calls above 185. Okay. Now, the more times it tries to break through, typically it does. Okay. So I'm kind of, with SPY and QQQ gaining strength today at the end of the market. I might be a little bit more cautious about doing this, and then I'll start flipping my sentiment to this. Right? Now that I see more times that NVIDIA is holding this 178, 179 area. Okay? Because my trading style is day trading and scalping. That means every day I show up to the market, I'm like, what trade is available today? Is it puts? Is it calls? Doesn't matter. I can trade both ways. All right. So if we're in resistance, cool, I might consider puts. If we're in support, all right, cool, I'll consider calls. All right. And then I'll look at the overall trend and see where our strength is. Right now, we're starting to gain a little bit more strength, and this could be a straight down move, break back above 185, and then straight up move. Okay. So in summary, trade the trend. The trend is your friend for anyone that's beginning. For those of you that are trying to get a little bit more savvy on your entries, right? Not just entering calls because everything goes up over time, right? You're trying to be a little bit more savvy of where you enter your positions. Look at your risk to reward profile, support, okay, at the bottom, resistance at the top. and trade those areas, right? Are we getting above? Or are we bouncing off resistance? Okay, cool, right? Do not trade calls up into there until you get a break above, right? Are we in support? Cool. Do not trade puts, even though we're going down, right into deep support. Okay. If there's no trade, do not take it in the middle. Wait for your areas, wait for the trade to come to you. All right. Hopefully this made sense. Hopefully it was valuable to you. It's just a question that comes up a lot about just simply do this, simply do that. And a lot of times, if someone really wants to learn to day trade and make money intraday, it can be a little bit difficult about understanding where to enter your trades and which direction the trade is going for the day. All right. Love you all. Peace, love, and blessings. Until next time. See y'all. You have a great weekend. Bye.